Hi, everyone, and welcome back to the podcast. Fraud and financial crimes aren't just growing, they're outpacing the tools designed to stop them. And as fintechs, payment service providers, and neobanks scale, many compliance teams are discovering that platforms they rely on are actually creating more work, more risk, and more noise. Today's conversation isn't about features or vendors, it's about what's fundamentally broken in fraud and compliance and how RegTech needs to be rebuilt for scale, trust, and real world use. My guest today is Arnaud Schwartz, CEO and co-founder of Marble. And today we are going to unpack what actually works, what doesn't, and where this space is heading next. Arnaud, great to have you on the show.
Thanks for having me, Ali. It's a pleasure.
Okay, let's start with this. What originally pulled you into the fraud and compliance space? Was there a specific moment, frustration, or failure that made you feel this space needed to be rebuilt rather than patched?
I've been working in financial services for almost 20 years. We saw firsthand in the financial services the growth of compliance, especially after 2008. It's been a growing pain. It's been a topic that is driving both innovation and constraint on the payment industry. It's a topic that's both very local and very global, which is extremely interesting. And in the age of AI and advanced engineering, it's a topic that has a tremendous potential for transforming the industry, making sure that it's no longer a pain, but it's a driver for innovation, it's a driver for security, rather than the multiple spreadsheet management that we had to deal with over the last few years. One of the reasons I went into this space is that I've been operating in payment for a long time. I saw the pain firsthand. I wanted to do something that's truly different on the market and that will truly help operators become more efficient in their business, but also remove the frustration of having to deal with tools that they feel they don't own or they don't manage really, rather than having something that is part of their own stack.
Mm-hmm. Right. Okay. And then what do you think is fundamentally broken in how RegTech platforms were originally designed?
Well, there's a lot of different approach on the market. Obviously, a lot of platforms were built around batch management, so post-transaction management. And in the age of real time, it just doesn't cut it anymore. The second thing, I think it's the hidden pain, but one of the biggest pain is that it still requires heavy engineering, consulting, management on top of the platform in order for it to work. And we should all strive for platforms that are super easy to use, but also that can evolve automatically with your needs and with your new threats. And finally, one of the big things that struck me looking at the market is that it's not your platform. You're basically sharing all your data with a third-party provider for most of the solutions on the market, except for the very, very expensive one. The new world order that we're in today, especially around financial services, there's a strong drive and a strong incentive to have better managed data, better safeguard data. And the best way to safeguard your data is to keep your data on your own infrastructure. And I think it's something that should really shape the market in the coming years, not only for performance reasons, but also for security reasons.
Right. Okay. We will talk about this on-premises deployment later on because you just highlighted it. But I just want to ask, when companies scale, most of the fraud and AML platform actually make compliance worse. Can you describe why it is so?
Yeah. The big threat on the compliance part is single approach, is having the same approach for different types of payment, different types of customers, and having a one size fits all. The big threat right now on most payment operators is that in the global market, they are expanding, they keep adding new payment scheme, they keep adding new coverage on their countries, but they're still managing everything the same way. Or worse, they're managing each different entity completely separately. There's no link between them. So there's really those two topics that come together. A single platform that allows you to be super specific on each of your payment, on each of your type of customer, is probably what's really needed on the market right now, just because, I mean, a risk-based approach should be the true reason behind compliance. And if you truly want to do risk-based approach, you need to take into account all the underlying information that you have and all the underlying risk, which means that it's not your third-party provider that should push onto you the way you should detect it. It's actually your own risk, your own business, your own payment method that should drive that. And I think that's one of the reasons behind the mess right now on the market is that you try to push something that is a square onto a round shape. Sometimes it works. A lot of time it could work pretty well, at least until you're scaling. And then when you're scaling, it becomes a mess to manage because either you're drawn under false alert or you're just not catching anything that's worthy. And you get analyst fatigue on your team, which means that you have to scale your team, you have to scale the human part of the process. And let's face it, 80% of the compliance cost, it's not the software, it's the human cost of the compliance that goes behind that. And that just doesn't cut it anymore in a world when you want to expand. If you have to hire 10 people every time you're scaling a couple of percent of your activity, it's really going to be tough in a low margin business to get profitability.
Right. Right. Okay. So also let's talk about the false positive because this is, I think, important. False positive are one of the biggest hidden costs in fraud and AML. Why do so many platforms still struggle to reduce them as companies grow?
I don't think it's going to disappear anytime soon for a very simple reason, which is the asymmetry of information. The end customer knows exactly why he's sending money to that counterpart with this amount for whatever reason. The bank doesn't know. All the bank knows, or all the financial institution knows, is that customer A initiated a transfer for such amount to account number B, and that's it. You have to manage with that. So you kind of have the mesh density that really fits your risk. If you want to catch small fish, you need to have a very tight mesh. If you want to catch big fish, you can grow larger. But in the end, a lot of things will go through that, and you're gonna have to catch that and manage that. I think that AI is actually changing this problem tremendously. If you're looking at the asymmetry of information, the true cost of this asymmetry of information is the management downstream of the alerts and the investigation. But AI can automate a lot of that. So the false positive narrative is shifting a bit, in my view. It's not about how many alerts you're generating, but what's the cost and the time of managing those alerts. If you're able to manage those alerts in seconds because it's fully automated and with a close to human or at least a human level understanding and risk approach, it changes a lot the problem and the cost balance. You don't have to hire more people. You don't have to add more friction to your customer. Or at worst, it's going to take a couple of seconds additional delay, which is almost invisible on the customer side. And you're going to be able to do a lot of things more smoothly without really having to do a huge breakthrough in terms of detection, just because if you want to do breakthrough on the detection part, you just need a lot more data, and which means going into the privacy of the end user a lot more than what we do right now.
But in terms of processing the alerts, AI does not care whether you receive 100 alerts or 1,000. For AI, it doesn't really matter, right?
You don't have to have people on the ground at 2 a.m. in the morning to manage the alert. You don't have to, I mean, obviously there's a cost subject behind that, but definitely if it's correctly set up, the AI should be a lot cheaper than human for that. The time window is 100% smaller using AI compared to humans. And even if you're not sure, AI can automate the investigation process even further. It can ask additional documents to the end customer. It can review the documents that are provided even before a human puts on that. So basically, the narrative is shifting. The human stays in the loop, but it stays way further in the process for the most serious alerts and the one that you want to have human investigating. And those ones, anyway, you already passed all the bridges before that. So the timeline is really different. It doesn't matter if it's done in 2, 3, 4 hours or even a couple of days. It's something that is truly important for the company in terms of safeguarding, in terms of security. But all the rest, which is 99% of the noise, is already fully handled and could be already fully handled by the AI.
Very well said, and very useful insight. Now, let's talk about Marble as a product. So you started as an open source transaction monitoring engine. Why choose open source in such a heavy regulated environment?
Couple of reasons. The first one is radical transparency. If you want to select a new vendor for your compliance and your fraud solution, you shouldn't have to go through tens of hoops to test the solution and try it on your side. With Marble, you just get it on your laptop or you deploy it in a small production environment in just a couple of minutes or hours, depending on the infrastructure you're in. And that's one of the big advantages of open source. The second thing is that you should strive for something that can really integrate into the stack of your customers. I really believe that SaaS is a huge burden for a lot of financial institutions. It's another dependency. It's a strong relation to a third party that puts a lot of additional regulation on top of the already complex contract that you have with them. So going open source was one of the drivers that push Marble as an on-premise solution. If you do open source, if you truly do open source, it means that you're cloud agnostic, you're infrastructure agnostic. You have the ability to deploy Marble pretty much on every environment. And that is a great way to push for something that truly works as an on-premise solution, not engineered heavy, but on the contrary, something that can be handled by a lot of different teams. And the final reason behind that is very simple. In the compliance space, there's an ongoing battle between on one side, let's say product and tech, and on the other side, the compliance teams. It's a permanent build or buy decision. It's a permanent conflict in terms of time allocated to the development of the needs for the compliance. Open source is a great third way. I mean, it provides you with the best of a professional platform, but it stays into your own environment. It becomes part of your own stack, which means that the compliant get the best of the world in terms of solution, but the technical team also gets complete control on what's going on. And if they want to do a very deep integration with the system, their hands are free.
Yeah, so I think I can second your thoughts, and we are seeing a broader trend where infrastructure tools are adopted by engineers first and later standardized by compliance or the risk team. I'm sure you would agree that a lot of companies must be using it as an open source and then might be migrating to on-premises version, enterprise version, right?
Yeah, it's definitely a great entry point into the solution. It's also a strong belief on our side that a company that needs to have a compliance stack doesn't necessarily have to pay for that. I mean, open source is a great solution for smaller companies with simpler needs. And once they are using Marble, if they are scaling, if they have more complex needs, it's super easy to upgrade them to a full scale plan. But at least it's there. They are already operating. They are already able to have high level of compliance and fraud management on their operation without having to go through super high payments. Enterprise is a path on the sales process, but the great way to do enterprise sales is to build trust with your customers. And what's the best way to build trust with your customer than giving them complete transparency on what you're building and what they can try and test with it through the open source.
Yeah, fully agreed. So, Arnaud, people love stories. Can you share a concrete example where a fintech, a payment service provider, or a financial institutions genuinely improved their fraud or compliance operation after adopting solution like Marble?
Yeah. Thinking about a very large payment service provider in Southeast Asia. They had operation over 7 or 8 jurisdictions, if I remember well. Each of the jurisdiction had their own compliance and fraud management tool. They wanted to build a strong oversight over what was happening in the different geographies. They're handling hundreds of different payment methods, literally hundreds of different payment methods. So it's a crazy high complexity. And actually, one day we received a Slack message on our community Slack from one of the engineers at the company. And basically they told us, well, we deployed Marble on production. It replaced all of our solution. We never had to talk to you. We were super happy with that. And it just works. We never made a single cent on that because they're using the open source version. But in the end, they really completely refurbished autonomously without having to create another SaaS dependency on the system, without having to go through vendor selection burden and everything. And it works super simply. And they're using Marble in production to oversee hundreds of millions of transactions every year processed through the system. So it's for us, it's a great story, mostly because it embodies everything we wanted to build with Marble. But it's also kind of a lesson in terms of enterprise approach. I mean, if you're building something that works, people will use that, actually. Even if it's just a GitHub, with, at the time, it was a fairly limited documentation. We improved a lot on that since then, but it worked.
Yeah, very true, very true. And what an insightful, amazing success story. Okay, now let's talk about AI. It's a buzzword. Everybody uses it. Not many truly understand it. So AI is everywhere in fraud and compliance right now. Where does it generally add value today? And where does it introduce more risk than benefit?
Yeah. The AI has been used in fraud and compliance for a long time. I mean, we used to call that machine learning. No, it's Gen AI for different use cases. It's an amazing and a frightening tool at the same time. Let's take apart machine learning because I think everyone's comfortable with that. But Gen AI is actually something that can do human-like interaction and analysis, which is something that's truly interesting for the business. One of the great transformation that we are likely to see in the business in the next 18 months to 2 years is that a lot of the work, if not every work that is done as a level 1 analyst, will very likely be replaced by AI. Right now, AI is already on par with human performance as a level 1 analyst, even more than that if it's properly configured. The latest models are amazing at managing that. So it's truly transformative because it's, as I said, it's if you look at a cost of 100 on compliance, 80% is on the human part, and only 20% is on the software.
Right.
The big challenge with AI is same thing as in humans. It's not actually fully predictable. You have to have the proper control. You have to have the proper oversight. You have to test regularly UI to make sure that it's in line with your expectations. There's not a lot of tools right now on the market to do that. It's still fairly complex to manage. I think it's one of the improvements that a lot of players will work on in the coming year. And also, it's a challenge linked for a lot of regulators to really understand what the AI is doing and how it can be controlled. So there's a narrative that needs to be built. There's an explanation that needs to be created behind that in order to make sure that every regulator is in line with the user AI, understands that, can assess it, can be compatible with it. Because otherwise, what's going to happen is that after the AI is used on the different alerts, for example, the result is we're still gonna have to keep human in the loop for a lot of time, which is a waste in a lot of time. I mean, right now, if you're looking at the test we've been doing over the last 6 months, I mean, the level of reliability and the level of let's say stability of the AI for level 1 investigation is higher than humans. So it's actually surprising to keep human in the loop for that. But there's a process behind that. It's going to take, in some geographies, a lot of time, I believe. But in the end, it's going to be transformative for the industry. We're talking thousands and thousands of level 1 analysts that will need to change in a way their jobs. It's also a huge challenge for everyone in the industry because, I mean, if you want to keep a human level 2, level 3 analyst, MLRO, and so on, it means that you train them. And the current path for training senior analysts and highly skilled analysts was first to put them as level 1 and to allow them to see a lot of good and bad things to train their eye, and then progressively to move them to higher levels of seniority. That part is going to be fully broken in the next year or so, which means that we have also to rethink the way we're going to train senior analysts in order to keep them efficient, because they need to have this imagination and this understanding on why the customer is doing this or that and why it's let's say a red flag or not based on the knowledge of the activity, without having to do this groundwork of first level of assessment of the different alerts. It's just not going to happen anymore.
So, Arnaud, you talked about the good part of AI that's being utilized by fintech companies, PSPs, but there is a negative side as well. The fraudsters, they're also using AI, and they are using social media platform as well. So, as you're aware that, Facebook, they've got a lot of data points for your target audience, at least 50,000 data points, and they recently introduced lookalike audience as well. So, on the other side, fraudsters are actually using the advertisement engine to target the victim and they are doing it at scale. How can you counter it? Fire against
Mhm.
fire, because AI is being utilized on both the sides.
Yeah.
Do you agree?
Um, Yeah, I mean, as every new tool, AI is first used by fraudsters before being used by financial institutions, just because fraudsters are moving faster than financial institutions. And yes, AI is actually changing everything on the market because it allows you to do a market-wide approach on tons and tons of targets at the same time. Um, it actually makes me very angry. It makes me very angry because it's not a lack of solutions that we have in the market, it's a lack of willingness. When we see that Facebook is doing between 10 to 20% of their ads revenue from scammers and financial services lookalike,
Mm.
it actually should make everyone angry.
Yeah.
Um, we're building better shields. We're building better detection all the time. We are gathering additional data points to better tackle those fraud, to better cooperate between financial institutions. But the cost is huge. The reality and and the true solution behind that should be accountability from the platforms and the social media. There's no reason, and I really mean no reason, for huge platforms like Facebook not to be able to detect that ads are run as a scam. In a lot of regulated market, um, you have no right to do any ads without proving that you are actually who you are and you are properly regulated and so on. On Facebook, everyone can create anything they want. They can target a very specific audience. They can run very deep and very efficient scams on their target audience without any accountability, without any oversight.
Yeah,
In the
they're not
world
doing
of
anything. Mm, mm,
yeah,
mm,
in the world of large language model, don't tell me that it's not possible to detect almost in real time or in real time an ad that's pushing for a scam, for an FX trader, for crypto shilling and so on. It's it just doesn't cut it. It cannot be heard. I think one of the things that's coming in the next 2 years for the platform is accountability of that.
right.
I'm seeing a lot of states trying to tackle the subject despite the US best effort on that.
Mm.
And it's likely gonna come, and I hope faster than expected.
Right. Okay. So I also want to touch point on this black box AI model as well. Why do you think? Why? Oh, I mean, why are black box AI models particularly problematic in regulated environment?
Yeah. So, um, if you're running a risk framework, you need to be able to show that the risk you're looking for and the assessment you're doing is actually in line with what you are setting as a risk framework for your regulator. You need to be able to explain everything.
Hmm.
Black box for me has two problems. The first one is the explainability. Why are you gathering those alerts and not those ones? And if actually you have no idea how the system is working, there's no way you can actually clearly explain that. The second thing is also um, the the understanding of what you're running. I mean, the true knowledge on the risk you're taking or the risk you're not taking. If you're running a black box AI on your system, you're fully blind on what you're missing or what you're catching, and or the reason behind what you're catching. Um, it should make every compliance and fraud officer very nervous
Hmm.
because let's take a very a very simple example. And I'm not saying that I've seen that already in the market, but it's something that could happen in the world we're in. If your black box AI is trained, for example, to avoid generating alerts on a specific country or a specific person and so on, and you have no idea what's running inside the black box, you're never gonna get alerts on those
Hmm.
unless you
Hmm.
do any manual or post-work analysis. And you could stay fully blind on critical topics for a very long time before being able to catch that. And if you think that industry-wide, meaning hundreds of financial institutions running the same black box as a solution, it means systemic compliance hole in the system. It means that an individual that has been whitelisted by an AI without your knowledge will never be catched for anything unless you're really lucky and you have one of your human analysts that befalls on the account and raise an alarm.
I fully agree. And that's an important point you raised. I also quickly want to address the human behavior part as well. You have said that the weakest link in the fraud prevention is often the human user. How much of fraud is really a technology problem versus a behavior one?
Looping back to your discussion about fraudster using AI more than financial institution, I think that it's more and more a human problem right now. I mean, the systems are great for detection. You could always progress on that, but we're talking tens of % of additional detection every time you're doing a great breakthrough. Right now, if you're looking at the scams and the losses, there's a huge part. I'm not talking about money laundering, but on the scams part, huge part are driven by human lack of awareness, of understanding of the risk, or just because, social engineering is so great right now that even the most trained people, people working in banks, people working in compliance, get caught in those scams very easily.
Yes.
Especially in the current environment where you see data leaks everywhere. Data leaks are a great way to do super efficient social engineering. You know everything about the person, the recent purchases, their behavior, and so on through leaks. So you could have something that's really truly targeted at them, that enters their mind as something that is part of their daily work, daily life, and then scam them very efficiently. As I was saying at the beginning, the bank sees a transfer from point A to point B for a specific amount. How do you know that it's getting scammed or going through pig butchering scams, or if it's just a legitimate transfer to support family, for example? That's really hard to know.
Yeah, very interesting. And do you agree that a small user experience or product change can stop more scams than complex detection logic? If you agree with this, which I think you agree, can you share an example where design or messaging made a real difference?
Yeah, design. I really think design is everything in the age of scam. The way you are designing your the banking act, for example, should truly change in that time. You've seen sometimes small examples, but super efficient ones. For example, at Monzo, I think they were the first one, but other banks followed behind that. You have an indicator when you are initiating a transfer telling you whether the bank is in communication with you or not. So you know that you're talking to a scammer rather than talking to the bank when you're starting a conversation. It can be also Revolut when they're doing their street safety feature, where you have different delays in validation when you are initiating a transfer from your home or from a random part in the country that wasn't designed as designated, as one of your usual location, to remove those high pressure, super fast validation that you get caught in with the scams. So those are small things that have huge impact on the customer trust and the customer experience, because it's not adding additional barriers to a customer. It's just better reliability, better transparency, and it's a big challenge for more traditional banks, because if you are looking at the app of a lot of let's say, you're a regular player on the market, the design is appealing, the emails are coming from different sources depending on who's sending the email. There's no true warning. I mean, obviously they're putting warnings everything for their liability, but warnings plus warnings plus warnings on top of text, and it's not helping anything on the market. So if I would do prediction for 2026, I would say that a job as a fraud designer should emerge on the market.
Rightly said. Yes, I agree. So let's talk about the future. This is the last question. Looking 3 to 5 years ahead, how do you think RegTech will look different from today, and what will become completely non-negotiable?
Yeah. That's tough because I mean, since 2 years ago or 3 years ago, and the rise of AI, everything's moving way faster than anyone could have anticipated. I would say the human part of the management of the compliance part will diminish tremendously. And not only on the investigation, the tools are going to be able to evolve automatically with the level of false positive, false negative that are tagged, with the feedback that are gathered from the system in order to provide new detections, adjustment on the threshold, and so on automatically without having to go through retraining. I think that's one part. And the second part is we're going to see a huge decrease in the number of people working in compliance.
Right.
As I say, there's compliance is a lot of grunt work, there's a lot of spreadsheets, there's a lot of manual investigation. And I really believe that a lot of that is going to disappear in the coming years. Maybe not in the next 18 months, because we're living in a world where those transformations, especially in financial services, take time. But looking at 3-4 years in the future, yeah, very likely. And everyone should prepare for that, because that's a huge shift in the banking organization. It means that we're moving from people that are doing daily work to people that are doing supervision. And that's, you already have supervision team in the different banks, but that's actually a different approach, different way of working when all the first level of work is done by the AI. So it's going to be a huge change on the market. I don't think a lot of institutions are fully aware that the model will tremendously change on that part. And the topic will be, how do you balance that between your capabilities to make your system evolve and integrate those new capacities? The second part, which is the regulator, will they evolve at the same pace as the technology? Usually not. So it means that we're going to have to manage that and find in-between solutions. And the last part is how do we integrate those new way of work into what has been a very traditional approach so far on the compliance. I mean, it's usually, especially in traditional banks, it's usually the worst tech part of the bank, the compliance. It's underfunded. It's still very manual. So the gap for a lot of institutions, I'm not talking fintechs that are embracing that fairly early, but the gap for more traditional institutions is very significant.
Yeah. All I can say is that the people working in the compliance department, they should definitely listen to this podcast. It's not good news for them.
I'm not saying that it's necessarily bad news. I mean, I don't think anyone likes doing the same level 1 investigation every day and working in repeat on the same alert. It's just that the job is going to change to something that is probably more challenging, but also a lot more interesting.
Yeah. Okay. So Arnaud, this has been a fantastic conversation, thoughtful, practical, and brutally honest, I would say. So before we wrap up, for people who want to learn more about Marble or continue the conversation, where should they go? LinkedIn?
Best way is take a look at our website, checkmarble.com, or directly take a look at our GitHub, GitHub checkmarble. Leave us a star if you like what we're building as an open source. It's the strong driver that pushes us to provide more tools to the open source community in the financial services.
Right. Okay, perfect. So thanks again for joining us. And to everyone listening, thanks for tuning in. If you enjoyed this episode, make sure to subscribe, share it with your team, and we will see you on the next one.
Thanks a lot, Heidi.